M25, a venture capital fund focused on early stage ventures in the Midwest. Thanks for joining us, Mike.
Yeah, thanks for having me.
Awesome. So I know he usually resides in Chicago, and so does M25. He's currently in Denver, but I'll share a little bit about his background. Graduate of Purdue University. He's also a board member of Pick Diversity. And is on the board of several startups and also Black VC as the Midwest lead. So I'm excited to jump in today and hear a little bit more of your background and to share with the audience. I was introduced to M25 when I moved to Chicago and was greeted by Mike and his community that he has formed out there of investors and startups through M25. So thanks for having me then, and I look forward to diving in and hearing a little bit more about your vision for your VC fund. But I'll turn it over to you. Can you tell the audience a little bit more about M25?
Sure. Thanks again for having me. This is fun. I'm excited. I've been looking forward to this. But yeah, so M25, we're a pre-seed and seed stage focused venture capital firm based in Chicago that invests exclusively in the Midwest region. We've invested in exactly 100 companies since 2015.
Woo!
We invest all over the place. Yeah, within the Midwest, we invest all over the place. So Chicago, we certainly have a ton of deals, but we're in 25 other different Midwest cities and across all different industries. And it's a good time. It's a fun time at the M25 office.
That's awesome, and I know that Midwest extends a little bit to Toronto, even though it's northward, right? Is that
Not for M25?
not for M25? Okay, I'm just checking. I was just checking
Just
because
want to make sure
sometimes.
that Toronto people don't get their hopes up. But
Okay,
yeah.
all right, there we go. So no, that's great. Definitely a needed focus with a lot of venture capital funds being in New York and San Francisco. So excited to hear a little bit more. Can you tell us more about your fund? You invested in 100 companies. What types of startups do you look for beyond being in the Midwest? And what size checks do you anticipate writing?
Yeah, no, generally we're investing in software companies, early stage. That said, in some cases we'll do things outside the box. We'll do CPG in some cases. We've done digital native brands, hardware. We won't do like life science or biotech or anything that we'd call like vice or syntax. So no alcohol, cannabis, or gambling. We are fun to hang out with. We just don't invest there. And I would say across the general listness of our industries, we have more weight, I would say, in fintech, insurtech, digital healthcare, logistics, consumer, and actually real estate prop tech, and of course, broad down the fairway B2B SaaS, right? So those are the industries we probably got the most weight in, but again, we'll look at everything in the region. And we're typically writing checks of $250,000 to $500,000, often leading or co-leading, but we don't need to.
Awesome. And can you share with the audience in terms of a little bit about the Chicago and Midwest ecosystem itself? I know when I went there, it's a small, close-knit community, and I think typically a lot of the investing, or even though Chicago, I tell people, is the third largest city by GDP in the U.S. And a large community by population is also up there. What can you say a little bit more about what makes the Chicago venture capital scene unique?
Yeah, sure. I mean, I think you hit some of the nails on the head, right? We're actually a huge ecosystem and economy. The Midwest as a whole is actually a very large economy, but regionally, a lot more disparate than maybe Silicon Valley or New York, Boston, right? Chicago benefits from a lot of the density that you would expect from a city, while there aren't maybe as mature venture capital firms here as you would find as the long-standing players on the coast. So very much an emerging market, very much some new ideas, new players to the table. And within the large list of the size of the economy is a very diverse economy as well. You have Fortune 500s based here in all different industries and categories. And it leads to a pretty eclectic scene.
Awesome. Yeah, when I went to Chicago, definitely seeing some of I mean, you have tech companies there, and I would say the entrepreneurial scene has been growing and continues to grow. Also because of organizations like yours. How did you end up starting M25? If you can share a little bit from your journey, as I know you graduated from Purdue, but focusing on public relations and advocacy, and then now ended up in VC. Did you envision yourself being an investor?
Yeah, no, that's a great question. Yeah, I'll say that my degree is in public relations and rhetorical advocacy, which is not a major that exists anymore. I think largely because most people can't guess what it's for, myself included. But it was really the subject matter that was really interesting for me. So into undergrad, I was interested in business. I knew I was interested in technology. And while I, did some hands-on learning on the business side as a student, as well as on the technical side, teaching myself front-end code and Ruby on Rails back then, I knew that within the curriculum of liberal arts, there could be something really interesting to understand about how companies engage with audiences and with individuals. So specifically, I was trying to figure out, like, how do I capture how Apple lovers love Apple almost as much or more than some people love each other in their interpersonal relationships, right? I mean, we've all seen the Android versus Apple users either in person or online, and they're both ugly. And that type of allegiance is like pretty powerful to figure out how brands can capture that. So that's what I was trying to go for with that study in the curriculum, and I'm still trying to figure out the answer to that question. But once I get it, I'm sure I'll be a force to be reckoned with. When I was at Purdue, I started something called the Anvil, which was a nonprofit entity separate from the university, the goal of which was to be a facility, co-working space, and incubator for students and entrepreneurs coming out of Purdue. Basically, several years ago, the entrepreneurial ecosystem at Purdue and in the Midwest was even further behind where it is today. And there was just a sense of needing community and resources for folks that wanted to go out and try to do the things that were happening on the coast. And so I built that program. The time I left, it was the largest student-run co-working space and incubator in the country. We launched the first Purdue company to go to Y Combinator, and then people in Indiana thought I knew something about tech, which was great for me. It helped me get my fellowship with Chicago Ventures, which helped me see kind of the other side of the table for the first time while I helped vet some deals in Indiana. And after graduating, it helped me get hired by one of my mentors, who was an early Oracle guy. He put some VC money into some nanotechnology out of Purdue, which was a wild ride. And then after that, the university hired me as a director to help manage their in-house incubator called the Purdue Foundry. So that's what I was doing prior to M25, prior to meeting my partner, Victor, who I actually met due to his interest in doing some diligence on some companies I was an advisor to. But prior to M25, my entire career was on the operator support side.
Awesome. No, thank you for sharing that. And can you share a little bit? I mean, just to share a little bit about the audience. There's founders and then also aspiring investors. Some excited about starting a fund. What can you share more about Victor? You guys finding each other and knowing that it was the right match.
Yeah, well, Victor's Victor. So there's only one of him, and he's a great guy. But I think that the thing that really struck us early on was we had a shared set of values and a shared set of excitement for the region and the opportunity in front of us. So if you go back and see what was supposed to be our fund announcement article, we had worked out an exclusive with Cranes here. We were excited. We were looking at kind of the copy of like, yeah, this can make us sound really cool, $10-11 million fund. And we thought the announcement was going to come out like something like M25 debut fund launches, blah, 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 blah. The headline was actually, would you trust these two millennials with $10 million? And in the moment, it felt kind of not super great. But in hindsight, that's what the market perceived us as. And honestly, although we've always found value in bringing in mentorship and coaching into our lives and learning how to level up and be the best investors we can possibly be, understanding we've got to earn our stripes and build that track record without kind of the normal apprenticeship that comes into venture. It was very real as to kind of what we brought to the table as well, as which was new energy, excited young millennials looking to like be hungry, learn a lot, bust our asses for founders in the region where we were trying to prove that there was value here too, right? We were looking to launch a thesis exclusively in a region where everyone asked us, is there enough deal flow here? And, fast forwarding, happy to say, I think we validated at least that question. But yeah, I think early on it was shared energy, shared excitement, shared set of values and trust. And that's what got us going.
Yeah, that's interesting. I wasn't aware that was the first response to the fund formation. But do you think, in your opinion, this is a more of a caveat, is like I didn't grow up in the Chicago region, but I love the city, and I find a lot of the investment is focused more on private equity or real estate. Do you think that response may have been a little bit more of the culture and kind of the shift to putting venture on the map a little bit?
Yeah. 100%. Look, the Midwest is speaking financially, is a conservative region, right? And most people that made money here, there's plenty of money in the Midwest. Like, don't think for a minute like all the millionaires and billionaires are on the coast. There's plenty of wealth in the Midwest. It's just more of it came not from tech. And more of it's kind of in that more conservative approach, old money mentality, where honestly, if you ask that same question as a headline in an article in San Francisco, would you trust these two millennials with $10 million? Like, so many people would raise their hands because they're like, that's what we do here. We invest millions of dollars in millennials because they turn it into billions of dollars. So it's just kind of funny to flip that on its head. Like, same question asked in a totally different atmosphere. The people receiving that message, like, yeah, that's how they made their money the last time. So I absolutely think it had to do with our region.
That's no, that's great. That's great insight. We had I think while it's a mix, right? It's like the outside of the coast tend to be a little bit more, I don't know. It's like a focus on tech, but at the same time, the outside the coast, there's a little bit more diversity in different ways. Could be socioeconomic or racial or what have you. Can you share a little bit more about the founders that you see in the Midwest and how you find they compare to those on the coast?
Sure. Yeah. I can only speak to one side of this because I've spoken to far less founders on the coast at this point. But what I will say is generally, I think true, is that founders in the Midwest tend to have a little bit more of that kind of that conservative mentality of the ecosystem kind of bleeds into this like a little bit more capital efficient DNA when it comes to building companies. Now that can be a challenge. In some cases, we're more often having to coach up founders to be aggressive and shoot big than we are trying to have to tell them how to control burn, because both have pros and cons. But generally, I think founders here tend to like build businesses first, raise capital as it makes sense later. Beyond that, I think what's also interesting is in some cases you have founders that are kind of flywheeling. They were part of a company that exited nicely, and they're kind of a first new generation of spill out talent. And we're also getting a new crop of talent coming in from the coast that would rather build their next thing closer to home or closer to where they came from. But those are kind of the makeup and differences in some of our founders.
Have you seen with the impact of, so speaking of the movement of talent, especially with COVID now, right?
Yeah.
Like there's we can socialize less on in the coast. It's more expensive. Funds go further in the out in the Midwest in a Chicago. What are you seeing in terms of the talent it changing in the region? Is it too soon, or what's if you can share some of the impact that you're seeing right now in the startup and venture capital space?
Sure. Yeah, I think it's a little too soon, but I think it's only because we're still in immense uncertainty. And if you got a job, like you're thinking twice before, just holding it out there like it's not a big deal. So I think what's changing is that we are seeing new people existing in this region, which is really interesting. But so far, I haven't seen a ton of people jumping ship or like leaving their companies just to start new companies. I think it's a little too soon, but I do think we're seeing leading indicators for it. I think the bigger change is that what we're seeing is that what's a reasonable market for a investor on the coast to look to write a check into is changing. If their previous criteria had to be something like in my backyard, or I want to be spending more and more time with this person because even the existing founders in their portfolio, the last however many board meetings have all been on Zoom anyway, right? So they've solved that problem with their existing portfolio companies. Now they're thinking about, okay, does it make more sense to be more open to write checks earlier or more aggressively in regions that aren't San Francisco or New York? And that's leading to some healthy competition, which I think for us is really interesting and exciting, especially with some of the work we've done building really strong trust relationships all over the country. As you know, our summit's an example of how we flex our network muscle.
Awesome. Yeah, if you can also share what are some of the things you do that again, M25, one of the, you guys are one of the most active investors, but also before you were one of the most active investors, still a community builder. Can you talk about the steps from going to, from of creating a fund from scratch? Like, what are some of the things you did that you think made M25 what it is today?
Yeah, no, sure. I think we really leaned into what what matters and how does that apply to how to be collaborative and competitive at the same time. So one of the things we did early was create a deal flow email that we send out monthly, which, some of my mentors on the coast who have been long partners at really successful firms, when I shared this idea, we're like, why would you share your deal flow? Like, why would you ever share your deal flow? And candidly, in the Midwest, you saw a lot more of collaboration and I guess syndicated rounds, or at least more broadly syndicated rounds. And especially early on, where we were writing, $100,000 checks, it's easy to fit 100K into a round that's competitive, especially if you made the intro in the first place, right? So we saw an opportunity to share value in a way that caused our network and relationships to grow, which long term, we put long term value over sharing short term value. And it's led to us helping our companies raise capital faster, helping companies that we don't even invest in raise capital. There's a very recent round that we passed on, and who knows, it's probably anti-portfolio now because at least a few coastal firms did their large seed or Series A, and most of those intros came from our deal flow email that we sent and then passed on the company on. So it's great to even tell those stories about founders who we don't even invest in adding value through things like that. And then additionally, looking at like our summit, for example, we saw a chance to create an event. We always had this thesis that given the size of the Midwest economy, if you could solve for the density issue by creating some sort of virtual density for the region, the opportunity could be huge. And we try to do that through things like MidwestStartups.com. We try to do that through things like our summit. And with the summit, for example, that event has always been only about productive interactions. As you know, because you've attended, the vast majority of the event is literally just meetings you actually want. And then we have like booze at the end, right? we have networking at the end and dinner, and we call it a day, right? But it's more and more we get rave reviews about that event because it's literally just how do you pack as much value and productivity for both founders and VCs into 36 hours as you can. And I think that's why it's grown from being 30 people in a room 2-3 years ago to being, hundreds of people, and invitation only. So
Awesome. Yeah, I very much enjoyed the event, especially being a new face in a new city and trying to find my grounding. I appreciated it. And a warm community as well. Definitely speaking to the collaboration. Shifting, I was gonna say shifting gears slightly, and sharing, that our guest today is an avid writer, and also on the topic of diversity inclusion in VC has his own blog. The link will be is in the podcast notes. But if you can share a little bit, Mike, on what, can you share a little bit about this? What's going on with D&I and and anti-racism in VC, and what are some things that you recommend that we can do to make sure we're elevating, women, Black founders, and other founders of color?
yeah, that's a big one.
Heavy topic, but you can start wherever you want.
Yeah, there's only about 35,000 answers to fit in
That's
that.
right.
No, but I mean, obviously, with the moment our country is in society is dealing with, which I've been on an emotional roller coaster, honestly, throughout this conversation, ever since the death of George Floyd to even now, obviously, because I think what's happened on a national stage is also encouraged our industry to take a closer look at this. And I honestly wrote the first piece, Racism Won't Die in 2020, as a self-reflection in a way to process some of the emotions I was feeling. Because, as a Black man in America, or a Black man in BC, getting a lot of questions. And I think a broad answer that many folks that look and sound like me were saying were, I'm kind of numb to this. I have, so many things to talk about, but, what's the point if this is just going to end where all the other moments have ended, which is not far enough, right? So I wrote Racism Won't Die in 2020, just for myself as a way to process emotionally. I shared it with a couple close friends and family. They strongly encouraged me to post it online. I literally created that blog just to post that thing online. And it was extremely well received, thousands of readers and responses. And it's led me to continue lead into what I feel like is an opportunity as a Black general partner in our industry to help speak any sort of value into this conversation. And so that's led to things like me drafting the anti-racism ownership framework, where basically I'm calling on firms, companies, executives to really look at this as less about what do I do from a reactive stance and more of what's mine to own in this. And with that comes a big question of reflection and contemplation, saying, okay, first of all, like, what's authentic to me? Like, what do I believe? What's authentic to me? Where are my morals bending to my politics or vice versa? And how do I look at what resources are unique to me and the opportunity unique to me in my position that I can add real impact into this conversation by taking ownership for what's mine to own. And through that authenticity, having the passion, resources, everything else involved to actually stay the course, not just to take action today or tomorrow or next week, but 3, 5, 10 years from now, right? It's been a really interesting ride writing all these pieces, but it's been encouraging by the response and the impact I'm seeing it have.
That's exactly the you hit on the nail on the head. The question I wanted to ask is more of course it was a moment, right? And I will say many moments, but in a short period of time. You talk about the protests and people standing up, but also the question is how do we make the moment a movement, right? Like, how do we keep this momentum going? I think the calls for Juneteenth, or the calls for to get funds to invest in more diverse fund managers, to hopefully that continues. what are some things you think, specifically in venture,
Yeah.
but you can venture out, go outside of that if you want. But if you have ideas, or how do we sustain the momentum in venture capital to make this a more equitable space?
Yeah. So, I have thoughts on this, obviously, more than we probably have time for, but just a few things I'd highlight. First of all, like, if everyone can commit to having a goal, holding themselves accountable and reporting it, that would be awesome, right? I think like creating mandates, you cause bad incentives, loopholes, and like just weird things, right? And also if you're a founder and you end up getting raising, for example, raising capital from a VC firm that has some sort of mandate that says they have to invest in someone that looks like you just walk into your next investment round with the signal, without the signal that normally you would have had from that investor, right? Because everyone that sees you take that capital has to question, like, did you get that on the merit of your company, or did you get that because they promised in some, mandate or commitment or report that they'd invest in how many people that look like you, whether or not it was ROI seeking or not, right? So I think power of suggestion is as powerful, if not more powerful than mandates. I think firms that can come up with their own commitments, and at least, especially if it's just top of funnel and sourcing, um, so they can say, hey, our goal is to see this many founders like X, and as a first step, and then hold themselves accountable. Even if they fall short of those targets, just having that target causes you internally to strategize in how you hit them, right? And any sort of improvement is worth the effort and the goal. And then the other thing I would say is going beyond top of funnel. So here's the deal, right? We're looking at, M25 is looking at, call it 150 deals a month, right? And we're investing in maybe one or two, right? They're all pre-seed to seed stage, which means like they're not much of anything yet. There's very little data. Historicals are kind of a joke more often than not. And we're looking at projections that we know are wrong. We just don't know in which direction. And that's what we're analyzing. And we'll narrow down that 150 to maybe 15 or 10 or 5 that are finalists of like most exciting in the moment. And we are well into subjectivity at this point. So what I want to be back to quickly is just the phrase implicit bias, which is most people look at implicit bias and they think of it as bias in the negative, right? So the implicit bias that so-and-so is less than, or not as good as, or smart as, or whatever. But not many people really capture thinking about implicit bias for, or in the positive. And the fact of the matter is, if someone looks, feels, sounds like, acts like, thinks like you, articulates their words like you're naturally going to have implicit bias for that person. And as an investor, you're building conviction on people, right? So not that that's a bad thing, but you just have to account for that. And so what I tell partners at firms or decision makers writing checks, like, hey, if you're in a room with a founder that objectively is interesting and you're having a hard time listening to them or getting excited because of whatever reason that you can't put your finger on, ask yourself in your gut, is it because they have an accent? Is it because they don't say things the way I would say them? Is it because of maybe something is it for the same reason that you might not want to just go hang out with them and grab a beer afterwards? Because in some aspects, yes, salesmanship and relationship building absolutely matters in this business. But you just need to, if more partners and check writers in our industry gut check themselves on implicit bias in that direction as well, I think it'd be really interesting on what companies investors are able to build conviction for or not.
No, I love that you shared that. It's something that we cover in the we do our we do an investor training program, and we covered our session on bias last week, where we talk about evidence and how we make meaning out of these things, right? A founder is from my same school. It doesn't mean anything more than they're from your same school, but we attribute trust, right? We attribute greater success or comfort in that bet, which are all things that we imply on the meaning to that. So I like what you said about the opposite. The other way is when you see someone, you're assuming that they just may be a higher performer. When you're making that investment and to manage that, what are some do you if you can share some of the tools that M25 uses in the in the process of selecting that 1 to 2 investments a month?
Sure. Well, one's a scorecard, and it's funny. I think most firms probably have some sort of scorecard at this point. Ours is quite robust. Abinaya on our team, who's also a senior member of our investment team. Her undergrad was in finance and computational mathematics. And that's really helped feed the algorithm that a scorecard has become. That gives us an objective lens into kind of like benchmarks that we attach to expected ownership targets that help us basically objectively say that a company is in the investable range or not. And then once we get past a certain scorecard, we allow ourselves to apply theses and kind of dig into some more of this objective stuff. But it's an effort to try to, as objectively and on a merit basis, screen and check our gut and make sure we're taking a comprehensive view and valuing things accordingly, no matter what our conversation had or felt like. The other thing I would say is, as you know, our team is incredibly diverse. So you have myself, you have Victor. Victor's the only white man on our team. You have Abinaya, we have Katie, and Leandro, right? And we also have Luke with us, who's with us currently from Booth and killing it. But that's our team, and so everyone has a voice in our deal room. Our pipeline meetings every Monday, everyone has a say on all the companies we look at, and I think that helps us have a little bit more of a. I mean, it definitely helps us have a more diverse perspective as we talk about our companies and kind of think about things that way.
Awesome, love that. And I wanted to switch. I know we're just about time. If you can share a little bit with the audience, as we're I guess staying in the world of we're getting ready for the elections, and there's a lot of uncertainty with COVID. In your mind, what are some of the big what's on top of your mind as we're going forward and we're in a state of that's very different than we probably thought we'd be the beginning of the year?
Yeah, no, I mean, I don't know if this is an answer you'd be looking for, but I'm a firm believer that no matter what happens on November 3rd, the last Q4 is going to be our wildest quarter as human beings in this country. It's going to be tense and stressful. Caring about anything is going to come with a cost of just mental health. And so I would tell everyone here the same thing I'm going to tell any of my founders, same thing my wife and I talk about is, let's stay focused on what actually matters. Let's prioritize the health and understand that hey, there's more good than bad in the world. And there's opportunity in chaos as well, right? So make the most out of this time and, take care of yourself.
Awesome. Thank you, Michael. So for those watching, this was Rebel One Live. Mike Asem, partner at M25. Thank you for joining us today, and appreciate you sharing your story and your time. And for those looking to read some of Mike's writings, check out the link in the live stream notes for his writings, but also a link to M25 VC. So thanks again, Michael.